We'll be discussing on the Central Bank of Nigeria's decision to retain the monetary policy rate at 27.5%, which this move marks the second consecutive time the CBN has kept the interest rate steady, citing signs of macroeconomic stability and growing investor confidence. The CBN's decision reflects a cautious approach to monetary management, considering recent improvements in key macroeconomic indicators. Nigeria's inflation rate has shown signs of moderation, easing to 23.71% in April 2025 from 24.23% in March. The relative stability in the foreign exchange market has also led to appreciation of the naira and a gradual decline in the price of premium motor spirit, which is also known as petroleum. So, what does this mean for Nigeria's economy? Here are some potential implications. We have a high borrowing cost, which with an interest rate of 27.5%, where borrowing money becomes expensive, which may discourage businesses and individuals from taking loans, potentially slowing down economic growth. Next up, we have inflation control, where, on the other hand, high interest rates can help control inflation by reducing demand for goods and services. And if inflation continues to moderate, the CBN may consider adjusting interest rates in the future. Currently, currency stability, the CBN's decision may also help maintain stability in the foreign exchange market, supporting the value of the naira. And economic growth, however, high interest rates can impact economic growth, as expensive borrowing costs may deter investments and consumption. So joining me today is Dr. Terfa Abraham, an economist and member of the Nigerian Economic Society, NES, who will help us break down the implications of the decision and what it means for Nigeria's economy. We'll discuss the potential effects on businesses, individuals, and the overall economy. Thank you for joining us. We're glad you're here.
Nice to be here.
All right. So with the Central Bank of Nigeria's decision to retain the monetary policy rate at 27%, what does it mean for the Nigerian economy? And I would like to delve into, the policy, the interest rate that guides, the commercial banks. How does it continue in that way, whereby it has continued for the second consecutive time, whereby they retained this monetary policy rate? So does it still ease, should I say, the borrowing process, whereby it is still at that rate? There is no reduction and there is no increase in that rate.
Okay, so thank you very much, and nice background that you gave regarding the implication on the economy.
Absolutely.
So, but there's an overall context, the way monetary policy works through the central bank.
Yes.
The central bank is the apex bank. It is the bank, the government authority that is responsible for monetary policy, and that monetary policy is part of the macroeconomic objective and policy instrument of the government. The other macroeconomic policies being trade policy, fiscal policy, income redistribution policy, and monetary policy. Now, all these policies work in harmony to achieve economic growth, price stability, full employment, and balance of payment position, working towards achieving a favorable balance of payment position. Now, if you zoom into the monetary policy space, the monetary policy is responsible directly for price stability. They are also responsible for economic growth and employment. However, their focus is price stability over the years and trying to achieve a favorable balance of payment, which is why you are also reporting how foreign reserve has moved. So you assess the external balance of the economy, looking at the foreign reserves or balance of payment position or balance of trade or those kind of variables. Absolutely. But in terms of the domestic absorption capacity, in terms of how monetary policy works, the policy instrument to look at, or the policy variable to focus on, is inflation, which in quotes we call price stability. That includes inflation rate, interest rate, exchange rate. Remember, these are all they're like prices. You borrow, the price you pay for borrowing from banks is interest rate.
Yes.
The price we pay when we want to export or import is exchange rate, looking for how to exchange our naira. And then in terms of when there's money supply in the economy is too high, you have inflation. So now, for the central bank, this is how they operate in terms of looking at how their policy work. Now, the policy instrument that CBN uses is open market operation and other instrument. Now, this Monetary Policy Committee periodically sits and review domestic and external macroeconomic environment to see how their policies have played out in terms of the economy. So what they saw is that inflation rate is dropping. Economic growth grew from third quarter to fourth quarter. Exchange rate is stabilizing. So when Monetary Policy Committee meets, the idea is to set, although we normally focus on the monetary policy rate, but there are other factors which your report also captured, like the cash reserve ratio. So the idea is to set a benchmark long-term overall interest rate that other banks can now factor in their own rates. So the monetary policy rate is like an overall, a broad-based interest rate, and they've set it, and what you see from the meeting they had is to retain it. Now, what that means is that they foresee that, or they assess domestically and externally, that their decisions they've taken in the last 3 to 6 months is yielding some result by moving us closer to inflation reduction and price stability. So the idea is not to change what is working, to just maintain position, maintain status quo, and see how the policy environment plays out in terms of affecting economic variables like inflation and GDP. So for the central bank, holding the MPR constant is just to maintain their position, to avoid a situation of changing a policy that has shown to be a potential of working.
That is very good. With this retention of the interest rate, where does it leave investors? Do you think that it will give a very positive push towards instigating investment in the country? Okay,
great. When it comes to monetary policy and CBN, it's very important for viewers, listeners, analysts to understand that, even the government to understand that central bank policy, especially monetary policy as a whole, is something that is modeled mathematically, using econometric statistics, using business decisions, using what banks are doing. Now, the interest rate we talked about, like we said, the MPR is a long-term interest rate. Now, for the central bank, two things matters: money supply and demand for money. Now, ultimately, the interest rate is what they use to price the liquidity aspect of their of how banks behave. Now, if the interest rate is too high, the idea is that investors will not be able to borrow at high interest rate. Now, remember that 27.5 is not the rate the investors will meet at the banks. Investors are likely to even meet in the bank a rate that is higher than inflation, MPR plus a percentage, to absorb the effect of inflation on the cost of borrowing. So investors will certainly meet a higher interest rate. But what the CBN has done by retaining this, the MPR, investors now know that the last time they borrowed, at least the interest rate will not change. So that's a good decision for them. For them, it's a boost. It makes them to still borrow more based on last lending rate. For those who find it high, investors who find that lending rate very high, it will not change their investment decision. Rather, seeing that the central bank has held this position, they will go ahead to still borrow, but if not properly regulated, transfer the cost of that borrowing on consumers through higher cost of goods and services that they pass down the buck. It's like kicking the can down the road. So for investors, like you rightly asked, it gives a signal of, good, they didn't raise the rate, so we can still borrow based on 3 to 6 month decision of last time. But ultimately, the implication is that the cost of borrowing remains, I don't want to say high, because they didn't change it. But those who have already borrowed, remember, investors invest not because they want to, but because there's a demand gap that they want to meet using by producing to meet up either goods or services. So, and this demand keeps showing itself. Nigeria has high, where population is high, and people will eat, people must use light, people must move, like fueling, people must housing, these basic needs. So long as there's demand for these things, investors will keep responding. Now, the market they go to borrow is banks. and banks central bank work through banks. So it's retaining the rate, just to make it clear, makes investors to know that the cost of borrowing remains unchanged from the last time. So it will be business, they'll continue, maintain status quo, and also have new entrant borrowing at the old interest rate. But recall that the interest rate is already priced to be very high. So it will not attract new investors borrowing from the traditional sources. Rather, you will have smaller investors looking for smaller financial arrangement to borrow from, because already right now, borrowing from family and friends is already exhausted. The changes in electricity prices, cost of living has exhausted borrowing from family and friends. So what you now have is emergence of very small financial arrangement, of small shark loans and those kind of platforms, looking for smaller people and smaller entrepreneurs.
Yes, that was what I was going to ask. Where does it leave the small business owner? So will that affect their borrowing power as well? Whereby will it be a situation whereby it has not changed, so that would enable me to borrow? But then how does it affect the consistency when it comes to the small business owner borrowing or, taking a loan from the bank?
Small businesses hardly borrow from the banks. Very small businesses. They utilize sources like family and friends, cooperatives, savings and loans, group rotational savings, and when somebody packs after a period. But remember, with our inflation rate on double digit, above 23%. Yes, we recognize that the trend is dropping, but we are still dealing with an inflation rate of 23%, with poverty very high. Yes, we agree that the government is doing its best, but the reality is that poverty remains high. And we are not saying, just like the papers have said, that it was caused by this government or that government, but as economists, as policy persons, this is our reality. Inflation is still double digit, poverty is still high. So where I'm going with that is that unemployment is also, at this point, also very high. Not because people are losing job, but because the one person working who could feed 3-4 persons like 2 years, 3 years back,
it gets harder to feed.
It's becoming harder because the value of what that person earns have really diminished. So the context is that for small businesses, people in recharge card business, people in not to promote anybody now, in cable TV businesses, people in online platform commercial vehicles, vendors, all those kind of businesses. These people hardly borrow from banks. They have a kind of arrangement that is outside from the banking system. Now remember, for central bank, the aim is to be able to control the financial system, to ensure that everybody is captured in one banking platform or the other. So regardless of where they borrow from, it's important that those platforms are also captured in our financial system, so that the CBN can be able to model money supply, demand for money, and understand how its policy variables are playing out. So for small businesses, for those anyway who are still able to borrow from banks, because commercial banks also are innovating, they are coming up with a lot of smart loans and smart lending for small businesses. So they'll still be able to borrow, but what you have this time around is that rather than them being able to pay up in 3 months, 6 months, 1 year, the bank will have to spread their repayment period longer so that they can pay high interest rate, but split it into smaller fractions. But those who insist on paying earlier, will just have to deal with the reality of paying at a higher at refunding
higher interest.
At higher interest, yes.
All right. So let us look at the effects of this retention on the naira, because as of recent we've seen that there's a continuous upward trajectory by appreciating, even though it is a very little margin when it comes to the naira. How would this affect the naira and its appreciation?
Yeah, well, for the naira, it depends. That has to do a lot with our external economic activities. What in terms of the export and import aspect of the aggregate demand, aggregate demand model, where you look at the consumption, investment, government activities, export and import. So naira has a lot to do with that. What happens in terms of import and export? Nigeria will continue to import. No country will stop importation, because based on international trade, what we understand, no country can survive alone. Every country needs something from the other country. So long as our import continues, we will always keep demanding for foreign exchange to pay for our imports. However, we are hoping that our export will also continue to grow stronger, so that we'll diversify away from exporting crude oil and this other kind of resource-based exports to exports that are manufactured or based on value chain innovation that comes from entrepreneurs. So that as we are also demanding for foreign currency to pay for our import, other people are also demanding for our own currency to pay for our own export, so that we have inflow of foreign currency to ensure that our exchange rate remains stable. Now, this is the economic way of achieving stable exchange rate. You also control consumption to ensure that what we don't need to import, we don't bother about it. You also control government appetite in terms of ensuring that what is not required for import is not imported. You also ensure that investors are also not importing every capital or intermediate good that they want. They are taking advantage of the local economy to source resources. This is what we learn from the proper economic thinking, that import-export, demand for our currency, inflow of foreign exchange is what stabilizes the naira. But what we have now is that you have the CBN intervening to stabilize the naira. So if that trend continues, the stability we've recognized in the naira will not last very long, and it will not change investors' decision. Because what you have is that we have too much naira chasing too much fewer dollar. So the central bank withdraws from foreign exchange or from the foreign reserve to close that demand for the gap in foreign currency. So it now stabilizes it gives the naira exchange rate a stable view. But like I said, this is CBN intervening. And if you recall recently, sorry, I broke you there. Recently, the CBN was reported to Nigeria was reported to have paid all its loan of COVID-19, and the special drawing rights is also being pointed at. So the concept is that we have all this foreign reserve, which the central bank statutorily is permitted and allowed to withdraw from to draw down from the foreign reserve to defend our naira. That is a stopgap measure. That is a measure that is helpful. However, we hope that our exchange rate is being driven by the volume of exports we are recording, and imports we are reducing, so that our exchange rate stability will remain, we reflect the real value of what it is. Anything less than this will only attract investors into a space that looks as though the exchange rate is stable. However, once they get into this space, they realize that they are facing a very high level of exchange rate volatility.
Okay, so let us go back to one that I believe people would say affects a lot more, which is the headline inflation. So we've seen that according to, the NBS, that it has dropped to 23.71% in April. That is last month, from 24.23% in March. So does this mean this retention has impacted positively by dropping the inflation, even though, as I always say, it's just a small margin? But then at the end of the day, what do you see in the future pertaining the inflation rate?
Well, for the inflation rate, the CBN hopes that inflation rate will always be achieving price stability, which is inflation inclusive, will always be a monetary phenomenon. But what we have in reality is that it goes beyond that sometimes. However, the CBN will still do its part to achieve this, to reduce inflation from using this monetary policy instrument. The component of inflation that is driven by monetary policy phenomena, which is money supply, demand for money, the quantity theory of money velocity, price and transactions. Now, if you recall, what the inflation measures is headline inflation, food inflation, and then overall inflation. What we notice is that food inflation is dropping, and then overall inflation is dropping. So what that means is that CBN traditional monetary policy of tightening, of reducing money supply, so that the currency in circulation will not be chasing too much goods and services, using its open market operation of treasury bills, and working with commercial banks. That component is working. So for the central bank being a monetary policy authority, I encourage them to continue tackling that aspect of inflation using their traditional instrument. On the food inflation, the CBN Monetary Policy Committee also assessed properly that working with security agencies to tame or curb insecurity, to allow food production meet its demand, is also helping to tame the food component of inflation. So it's expected that as the CBN continues to work with other agencies, not directly, but maybe through some form of understanding, to ensure that insecurity is addressed and food supply gap is also covered. We help a lot in taming overall food inflation. But remember that that's just on the food inflation side. There's the aspect also that the CBN needs to continue to tighten monetary policy to ensure that it addresses inflation. But tightening monetary policy, at sometimes, they need to check on the other side what fiscal policy is doing. Because traditionally, we always recommend that there should be a judicious mix, that's the word we've always used, between monetary policy, fiscal policy, trade policy, income redistribution policy. So whatever we're doing with humanitarian affairs, social intervention programs, whatever we're doing with our trade, import, export, we must always keep an eye on what the implication of monetary policy on those policies as well as fiscal policy. And right now, if you look at the fiscal space, we've entered fully into the implementation of 2025 budget. You hear the National Executive Council, Federal Executive Council, always making reference to renewed hope agenda in this area, 150 billion for agricultural development bank. So all these things just signals that a lot of spending. And remember, the 2025 budget is already large. It signaled an expansive, expansionary fiscal policy stance. So the central bank, knowing that the fiscal side is all out for spending to address social gaps in the social sector, health, education, women affairs, everywhere, the central bank will also want to be careful. So rather than reducing or increasing the interest rate, it was just a very good measure to hold it constant. Now you see the context. To hold interest rate constant. Otherwise, a CBN at this time also reduce interest rates. What you have is that they are moving away from tightening monetary policy to becoming more expansionary, or to loose monetary policy. So you have fiscal policy expansionary, monetary policy also getting loose. So you have inflation coming from the component of money supply demand challenge that the economy will not be able to understand. So it's important that they hold their own part of the equation constant to see what happens on the other side. So it's important that aside this inflation on food, the idea of energy cost of energy, electricity, yes, access to utilities, water, and these other factors. Those are
still high.
Yes, so it's important to also help the investors in these sectors address whatever their cost structure is, to help them address that part that is making them look towards to look up to high prices as the remedy for their business model. We have to help them address that challenge. Recall, in your very good introductory background, you talked about price of PMS also going down. Yes. It's not going down because the federal government is doing something unique or not doing. But the idea is that it's going down because the federal government has allowed or enabled competition in that sector. So it's also important to help these other sectors in the energy, transport, to address their own costs, so that ultimately every component in the cost model will be driving down and ultimately playing out on overall reduction in inflation rate.
Right, right. So moving on to, as we spoke about inflation, but then stability in the foreign exchange market, and we spoke about the naira, and you said the involvement of the CBN might not retain, that appreciation of the naira. Do you think these developments justify the decision in retaining the interest, whereby even though the CBN is involved in making sure that the naira is stabilized, but this particular decision of keeping this interest, will it in a way aid it, even though you said at a point it might stop the appreciation of the naira?
For the CBN, holding that interest rate constant was just the aspect of the equation that they can control. In terms of how Nigerians, our demand, our marginal propensity to consume foreign goods, CBN cannot control that part. So, and it is that propensity to demand or purchase or import anything that we think we can import that puts pressure on the naira in terms of Nigerians looking for foreign currency, euro, dollar, or any other currency to import something. So for the CBN, holding the interest rate constant is the part they can handle. So, but Nigerians also have a role to play in terms of telling or determining whether the policy measure of the CBN on exchange rate stability will hold for a long time. It's just like a first line of defense approach for the CBN to see demand for foreign currency creating a gap in our system and filling it up so that it will stabilize the exchange rate. However, when we keep demanding, every Nigerian now keep demanding for one thing or the other to be imported, the CBN, that defense line for the CBN will not be able to hold for too long. So at some point, we'll lose it again. You see exchange rate just go up, and then before they use one or two approach to control that part, we'll just be going back and forth. You have the curve, rise, increase, decrease, rise, increase, decrease. So the key thing there is for, first of all, Nigerians to, like they say, buy Nigeria, consume Nigeria, purchase Nigeria, so that it will reduce the pressure on the naira. The CBN traditionally, like I said, it's modeled. It's one policy institution that almost works like a graph, where mathematics works, where statistics, research, economics, regulation works effectively, because their instrument of operation is clear. From CBN to commercial banks, they sell treasury bills, the market buys, it reduces inflation, and vice versa. It just works straight like that. So it's important that it's good news that our exchange rate is stable, but like I said, the power to hold it for long does not depend on CBN alone. For CBN, the arsenal they have for that policy response is to keep drawing down from foreign reserve to supply to close that gap. But remember, our foreign reserve is also used to measure our external economic health. The rest of the world, Morgan Stanley and everybody, the rest of the world, assess our country and other countries using our foreign reserve. So the more we draw down on foreign reserve to defend naira, which is coming from people's consumption pattern or habit, then we'll be also giving our country a weak image in terms of how healthy we are financially. Therefore, every effort that every minister, the president, every governor, every person is making to attract foreign investors, you'll be making those efforts, but the foreign investors will be looking at your foreign reserve. So, nice speech from you, by the way, but your foreign reserve does not show that you have a healthy economy that is investor friendly. So, they will take handshake, take all those pictures, promise to come, and then they will not come fully, or they'll come partially, or come even less optimal. So, that's the point I really want to make. But for investors, Nigerian investors, for the optics generally, for the investment optics, achieving reporting that our exchange rate is stable is a good indicator. However, like I said, holding it at that level and even improving it is way beyond central bank. But central bank will not stop doing its own part in that regard.
All right. I would like you to give an overview of CBN's decision. Mm-hmm. How do you think it would impact Nigeria's economy generally as a whole, positively or negatively?
As a whole, that's a tough one. Now, overall, remember this Monetary Policy Committee, they always assess domestic macroeconomic condition and external to arrive at this decision. And if you follow the report, and I'm sure you've done that, all members agreed on the decision. And typically, they don't have to agree. They just vote. Maybe 6 people will agree, 4 disagree. So the context is that from the assessment, they see that it will help maintain the macroeconomic result that we are seeing already, as reported by reduction in exchange rate, as you said, even though it's marginal, but there's reduction. Growth in real GDP from 3rd quarter to 4th quarter, stable, in quotes, exchange rate, and then other macroeconomic indicators also picking up. So that is the reason why they held all those variables constant. That if what we did in the last 3-6 months is already yielding this level of result, let us maintain the same thing. Let us not change what is working, because obviously a reduction in inflation is good for all Nigerians. CBN is not a political institution that will be dishing out cash transfers.
Absolutely.
CBN improves people's livelihood and welfare by tackling inflation, so that the 1,000 naira you and I hold today, we have more value. The purchasing power for that naira will be higher. This is how CBN rewards the Nigerian people. It's not a political office department that dishes out. It fights, it improves the economy by reducing inflation, and CBN cannot give up on that. So it's important. From my view, holding the interest rate constant, maintaining all policy variables constant is a good move, just like the committee assessed, because it's working anyway, and there's no need to change what is working. However, there's need for more innovation to ensure that we record greater decrease in inflation, so that this the gains from inflation will translate into improving the purchasing power of the naira in people's pocket. And to do that, CBN also need to partner with the competition, FCC, Federal Commission on Competition, and that competition agency, Standard Organization of Nigeria, NAFDAC, everybody, and Department of Petroleum Resources, NDPRP, their new name now, to ensure that, and also retailers and wholesalers, to ensure that people are not exploiting Nigerians by still using old prices, high prices, and instead of selling to Nigerians at prices that reflect real market reality. So there's a lot that needs to go on to see that monetary policy variables, growth, and the improvement in monetary variables, monetary policy variables that we are seeing translate into improving the real purchasing power, the welfare, and the livelihood of the Nigerian people.
All right.
Yeah.
So we will, let's look at something a little bit different with the retention of this interest rate. How do you think it would affect the stock market and other financial markets in Nigeria? Okay,
so the financial markets, money market, capital market, very important. Money market, that's where you have all the banks and CBN policy working through monetary policy. Capital market, you have their own regulation. Security and Exchange Commission, Nigerian Stock Exchange, all those guys, all those involved in long-term borrowing. Long-term borrowing is what happens in capital market. Money market is short-term borrowing. That's where banks come in. Now, the interest rate that monetary policy deals with is factored in the long-term borrowing space, which is capital market. But that's not the only variable that is used. CBN policy works effectively for money market and is priced into capital market activities, because capital market borrowing is different. It's long-term. It has to do with government bonds. It has to do with which company is quoted or in stock exchange, which is not. Which company is able to raise more to attract more shareholders using their initial public offer and things like that. How government is able to borrow for a long time through bonds, whether federal government, local or state. Now, recall that recently the finance minister made it clear that our capital market is the hope for achieving our Nigerian dream of 1 trillion naira or dollar, 1 trillion economy. So the context is that capital market will always reflect what drives capital market investment in terms of what is reported is volume traded daily. As we speak now, capital market trading is going on. Volume traded, the price paid, all the exchange going on. Decision to buy and sell. At the end, when the market closes, it reports what investors' decision in real terms, from banking to insurance to every aspect of the economy. So the point I'm making is that the monetary policy announcement in terms of retaining all these rates will have an announcement effect on capital market returns or variables, but it doesn't determine overall what plays out in the capital market. It's a different market, a long-term market for borrowing. It just depends on what plays out in that market. However, holding interest rate constant will be priced in capital market in the decision space of capital market investors.
All right. This was really engaging. Thank you very much for being here. It was an absolute pleasure, and thank you for highlighting a lot of, things on this retention of the monetary policy and educating us as well. Thank you very much.
Thank you very much. My pleasure.
We will be going on a very short break. Make sure you stay with us so that you can be involved in our review of our national dailies. And we'll see you in a short while.